In January 2021, I turned $7,000 into $17,000 in a single week. But that's not actually how I built a portfolio of over $100,000. I started investing at 17 with $500 in my brokerage account that my dad had to open for me because I wasn't old enough at the time. No degree, no mentor, no strategy, just a kid who thought he knew what he was doing. By the time I turn 25, that account, alongside others I've built, will be worth over $100,000. This video is the full breakdown. Every move, every mistake. I'm going to cover everything I've done along the way, especially the boring stuff, as that's what propelled me over the finish line. At 18 years old, when I first opened up my Robinhood account, the only stocks I had at the time were Microsoft and Take-Two, which owns GTA 5. It's only fitting that that's what I would invest in at that age. It was at this point that I began to experiment with options trading. I got lucky really early on with some initial hits. I bought a Netflix call that doubled overnight to a $335 profit. I did the same thing 2 weeks later when I bought calls on Microsoft before earnings, and I managed to profit over $1,500 in a single night from that trade. Now, after my two initial wins, I then went on a losing streak. By buying options on names such as Zynga, Chewy, Alta, I managed to lose around $1,000 of what I had built up. So I learned very quickly by the end of 18 that you can make a lot of money and lose a lot of money very quickly by playing with options. With some deposits from work, I had built this account up to around $3.5 grand of net worth. Age 19 is where things get really interesting. For those of you who might remember, 2021 January was the year of the meme stock. Throughout December 2020 and January 2021, I made some questionable trades on names such as Palantir and particularly GameStop. GameStop is really where I took my biggest risk to date, and somehow it paid off. Starting with nearly $7,000 in January of 2021, I managed to trade my way to nearly $17,000 by the end of the month. Although immediately, I sold all of those positions and I concentrated on just two names, Microsoft and AT&T. I wanted to yield a high dividend, so I chose AT&T, and I've had Microsoft since the start of my investing journey, so I continued to believe they were a good company, and I invested the rest into them. By September 2021, right as I was turning 20, I had around $20,000. It was at this point that I really wanted to build a solid foundation for my trades going forward and not be tied to the individual and volatile whims of the market on individual shares. Throughout age 20, this was a brutal year for me. Having started age 20 with around $19,000, the value of my account had shrunk to nearly $13,000. Because I had made so much in a taxable account on my GameStop trade and I couldn't afford to pay all the taxes, I had to shift around $5,500 from my taxable account and started a traditional IRA. To this day, I have not contributed a cent more to this account. So the value of that account is based solely on what I have put in after that initial deposit at age 20. I'd watched the value go from $20,000 to nearly $13,000 over the course of a single trading year. Throughout age 21, this is when I began to consistently contribute to my account. I began to diversify a bit more into bonds and some international stock exposures. Primarily, I was invested into ETFs alongside a few dividend-focused stock plays that I chose, such as Microsoft, Apple, Coca-Cola, companies that would build their dividends over the long term. By the end of 21, I managed to build my account back to approximately $19,000 of value. The main takeaway from this is staying invested through the dip, as long as you're in it for the long haul, is often the best thing you can do. Going into age 22, this is where some of the real compounding begins to happen. I was 2 weeks into my first job out of college. This is when I first began investing into my 401k, and I specifically chose a Roth 401k for the tax advantage benefits of that account in the future. My new job came with a 6% retirement account match into that 401k, so I made sure to contribute at least that 6%. From that point on, I've decided to do 15% of my salary into that account. I've been effectively saving 21% of my salary into that 401k account ever since I turned 22. By the end of 22, with the consistent efforts I made during the year, I had grown the value of my whole accounts between my non-401k and my 401k accounts to over $40,000. And that's split between around $25,000 in my non-401k and around $20,000 by the end of my first year in that 401k account. Now, age 23 is where I really begin to see the value of my consistent efforts. Throughout age 23, I fully automated my savings. On top of the 15% contributing to my 401k account, I decided this was the year I was going to max out my Roth IRA. Every month, I committed to contributing at minimum $500 for that month to my Roth IRA account. In that account, because it was so small at the time, I decided to make some smaller targeted investment plays. Some of the areas I focused on with these targeted investments were in space stocks, alongside semiconductors and cybersecurity. My investment philosophy right now is putting the majority of my money into targeted ETFs in the S&P 500 and international stocks with a small exposure to bonds. Not much, because at my age, the time I have to compound my investments will outshine any bond investments I can make in the short term. I'm not chasing short-term stability, I'm chasing long-term growth. At the end of age 23, the breakdown between my non-401k and my 401k accounts is approximately $30,000 in my non-401k and around $40,000 in my 401k. It's at this point that my 401k began to do the brunt of the legwork in my investing journey. Between the value of all of these accounts by the end of the year, I managed to break north of $70,000 in value by the end of 23. Age 24, I continued much of the same. My 401k investing has still continued to be automated, and at this point, my 401k is starting to see the value of that compounding growth by having contributed so much early on. My Roth IRA particularly has done a lot of heavy lifting this year. Between the contributions I've committed to making every month, the commitment to investing the majority of my money into low-cost index funds, and the targeted investments I've made into smaller, higher risk companies have paid off. One share of stock I bought in my Roth IRA has grown nearly 15,000% over the course of a year and a half. So all of that being said, by the end of age 24, here's the full breakdown of my assets I currently have. In my taxable brokerage account, I have $26,000. In my Roth IRA, I have $23,000. In my traditional IRA, I have not contributed a single extra cent to this account, and I've grown it to nearly $9,200. Now, the heaviest lifter of this whole portfolio is my 401k. Currently, the value of my Roth 401k sits at nearly $76,000. By just committing to contributing 15% of my salary into this 401k account, I have grown it to be half of the value of my entire portfolio. Now, all said and done, the total value of my assets is at $135,000. I've managed to blow past my goal of $100,000 before 25 by nearly 35%. And as I've already mentioned, the bulk of this has just been through consistent automated investing. I did get lucky a few times early on with some meme stock plays and some other lucky trades. However, the main thing I learned from these early trades was that it's never guaranteed to make the same return again. It is more than likely that I will continue to attempt to make high risk, high reward trades and lose everything I have. Therefore, now my strategy relies on contributing the majority of my money into low-cost ETFs and index funds, banking on the steady returns that can provide over time, and then taking some extra money I have on the side, limited to around 5% of my net worth, and then choosing targeted, risk-controlled investments. Going forward from here on out, my next goal is to hit $500,000 by the time I turn 30. This same playbook is what I'm going to continue to use to reach that goal. I hope you've enjoyed watching this video of how I managed to grow a portfolio into over $100,000 before I've turned 25. If you would like to see a breakdown of each of my individual accounts, please let me know. I'm happy to share more about how I've grown the investments I have and how I plan to manage my investments for the future. Thank you so much for watching.